Hi, my name is Leon Rowe, currency trader and trading coach at trading180.com, and welcome to today's video on the euro and just an update on what's going on. Basically, the markets are rebounding, or the market rebound continues as Italian fears ease, right? So hopes of a resolution to Italy's political crisis calm nerves, but investors remain cautious over Spain and US tariffs on the EU. So a couple of days ago, I made a video basically about buying the euro, right? And I was talking about this level right here, right? And this was an area where, if you look to, past support and resistance within that, supply and demand zone, somewhere put it around here, right? I was basically saying, look, why are you buying down here, right? Why are you buying the euro, even though it's technically a decent level to buy and it worked in the past, but just be careful about why you're buying the euro, just based off of a technical pattern, right? And yes, as traders, we're dealing with probabilities, but yesterday, but the day before, Tuesday, pretty much the markets were in panic. Now, you would have been a very brave person, or pretty much just gambling, for you to want to buy around here, right? And yes, yesterday we did have a rally, and today we are having a rally. But if we go back to the markets, basically today, there is obviously hopes of a resolution to Italy's political crisis, right? So maybe that's what's driving the euro, or easing the selling pressure on the euro, right? So we have a few notes and a few quotes here. So indeed, it is indeed a positive start for European markets, albeit a slightly tentative one given the geopolitical tensions at the moment. We are not back to normal, but markets have quite reacquainted themselves with what normal might look like. Italian bond yields, blah, blah, blah. A consensus is forming that there will not be elections in Italy until September at the earliest. Italian president is waiting to see if two parties can in fact form a coalition. And then there's basically the agenda, which was about an hour ago. So investors wait for Spanish and Italian political developments. And it says optimism about the Italian political crisis can be resolved without new elections. It's expected to see markets continue to their revival today. And then it goes into some some quotes and stuff like that about what exactly is happening. So when you're seeing something like this happen, does that mean, right, that you should now, you see an engulfing candle, that you should now start buying the euro, right, if prices pull back? With political crisis, right, when there's a political risk off caused by any kind of politics and stuff like that, it can be very challenging to really hold a trade, simply because anything can happen at any moment, right? It's not like economics, an economic maybe policy where, let's say for example, GDP or jobs numbers, once they come out, then you've pretty much got maybe non-farms, I think, is out to tomorrow, right? And let's say for example non-farms is down, yeah. You've pretty much got another maybe month before your next non-farm report, so that can have a negative impact, for at least a week or two, right? Whereas with politics, you never really know, that a politician could open up their mouths and say something, or something come out at any particular time that can pretty much just drive the euro, to the downside, right? Or to the upside, right? It actually might go in your favor, right? Two parties might agree, elections off the table, snap elections, and then, you could see, prices shoot up, and the euro will then seem quite undervalued around here, right? But what I'm saying is just be aware of what's going on, both politically and from an economic standpoint, because there is today, we go into today's news. We've got, Euro CPI estimates, right? And I do think that, inflation will come back into Europe, and this is simply because the Euro's been very, quite weak over the past month or so. So I do see, forecast 1%, potentially 1% or more across the Eurozone. Weak currency tends to obviously increase inflation, right? But getting back, sorry, to the charts, just be careful. Just because you see an engulfing candle at a level of, demand, right? And that has some confluence with some support and resistance, does that mean that you should now be, taking this trade? Again, the decision is your own, do your own research, but again, just be aware, maybe readjust your expectations into thinking that this is going to, maybe shoot for a, a 1-to-1 or 2-to-1, depending on where you put your stop loss. Let's say, for example, zoom in, give yourself a bit of space. So maybe if you're trading off the daily time frame anyway, that would have been about 160, 170 pips. Can you really see prices going at least? I mean, I always say try and go for it. It's 2-to-1, or at least a minimum of a 1.5-to-1. But let's say, for example, you're even shooting for a 1-to-1, right? Can prices go up here? Right, euro wise, you might want to see some dollar weakness. There is some dollar news coming out again on Friday, non-farms, and especially average hourly earnings. I don't expect average hourly earnings to, be that high and achieve, their inflation targets, to be fair, again, because we had this really strong dollar, as you can see across the board, not from the euro, only from the euro dollar, but from, a lot of other dollar pairs. So, for example, go to pound dollar, look at this move. The dollar's just gone from strength to strength. We could see obviously some upside as well, because of not necessarily because of euro strength, but because of dollar weakness, right? So again, this is just to let you know and basically be aware of what's going on. Maybe readjust your expectations, maybe just enter maybe half or quarter of a position, a speculative position, rather than, trying to jump all in and, normal positions and stuff like that, and just be cautious about what's going on. Sometimes fundamentals and sentiment is clear, sometimes it's not as clear. And when it's not as clear, you shouldn't necessarily be risking it all, or, maybe your usual amount. Just, preserve your capital, and be cautious, and just have a read up on what's really going on. And if prices do start going in your way, let's say, for example, on Friday, you don't get any political news potentially on the euro or any updates, and then all of a sudden on the FOMC you get, when was it, today, so tomorrow, FOMC average hourly earnings are below, way below actual, and you get potentially a lower non-farm employment report that may want to drive potentially the euro. If you are trading the euro, by the way, this currency pair, this might want to drive it obviously higher in the short term, but in the medium to long term, is holding on to the euro the smartest bet, right? From an economic and then monetary policy standpoint, maybe not, right? So maybe it might be, you want to look at another pair, like a more stable pair, like, for example, the Aussie dollar, right? Where the Australian economy is decent, and they're not having as much necessarily political turmoil. So maybe this might be a safer bet to basically bet against the US dollar. Again, this is not financial advice, just this is how we select currency pairs, right? And trying to choose the best currency pairs to trade. It's basically just trading strength against weakness and looking at economic and monetary policies, and also what's going on politically with the currency pairs, as to choose the best pair really that we think should go to the upside or potentially to the downside, right? So with that, just have a quick look at what's going on. This is the Guardian website business. I'll post a link in the description box below. Hope you have a great trading week. We have again, euro inflation today, and non-farms tomorrow, as well as average hourly earnings. So just be careful out there. Lower your risk, your bet size, your trade size, and yeah, take care.